Thanks for joining us this morning. I'm Marlon Bowling with you. Happy Friday to you. Always glad to talk with you about our ag commodity trade. And I am joined by Mr. Brian Hoops, the president of Midwest Market Solutions. He hails from Springfield, Missouri. He joins us right now. First off the top here, Brian, we had some jobs data that came out this morning, and it seemed like it was above expectations. If I remember this correctly, it was above expectations a little bit, but below the numbers that we had last month. So it was kind of a good news, bad news scenario. Explain the fallout from that report, if there is any, would you?
Yeah. Good morning, Marlon. The jobs numbers that came out this morning, they're going to be perceived as a little bit of, hawkish as far as the Fed goes in their determination. It kind of revives the inflationary fears once again. The stock market, which was trading a little bit higher, fell quickly and went to new lows for the morning after the report came out. And the dollar, which impacts our grains and our livestock a lot, was trading lower most of the night ahead of this report, and then as soon as the report came out, it rallied to highs of the morning. So it has some implications as far as how our grains will be affected. Crude oil, which was sharply higher overnight, has come off of its highs as well following this report's release. So we've traded the grain markets just a few minutes after the report came out. Beans ended lower in the night session, corn just a little bit higher, and we're going into a fairly active harvest weekend. We drove from Springfield up to Des Moines yesterday and saw combines running everywhere. So there's a lot of crop being taken out. A lot of crop to go, though. There's a long ways till this end of harvest. And even to get to 50% harvested mark, I don't think we're going to get there by Monday's crop progress numbers.
But there really isn't much to hold the harvest back either, is there?
No, there isn't. The only logistics things that would be is if some place that you're unloading grains at would get full or get slowed down. That could be kind of a signal that maybe slow this harvest down just a little bit. Basis levels getting fairly wide compared to what they were a month ago in the eastern belt. They're still very, very tight in the western belt. So there's not going to be anything from a weather standpoint that's really going to slow the harvest down. I don't think it's going to be pretty much wide open.
Well, let's look at how we finished up in the overnight trade. And I want to remind everybody that once again, still didn't see any flash export sales announced overnight. Very concerning to a lot of folks that we just don't have any business this time of year, especially. December corn finished up overnight a penny and a half higher at $6.77. On our quotes provided by Bar Chart, we switch over to soybeans. And November was down 3 3/4 cents. We were at $13.54 1/4. A penny and a quarter off of our low of the overnight trade. It was off of its overnight high by about 9 cents or so. As we move on to our wheat market, we start in Chicago. Now here we had double-digit gains. December was at $8.89 1/4. That was 10 1/4 cents higher this morning. In Kansas City, December was 10 1/2 higher. It finished at $9.75 1/2. And in Minneapolis, spring wheat, December was 11 higher at $9.73 1/2. That cotton market that's been so volatile lately was down 77 points overnight, December at 82.13 per pound. So with that being said, Brian, I'm going to take a break right here, and then we'll talk about this livestock trade and maybe some of the impact of the outside markets and geopolitical issues maybe when we come back. All right, we're back talking with Brian Hoops of Midwest Market Solutions. Brian, let's talk about the setup here on the livestock trade and the outside markets that you just referred to. If we see weakness in the equity markets today, is that going to continue to keep a lid on the livestock trade, do you think, or not?
Well, it's always that possibility with the stock market declines. We start talking about inflationary fears once again. Concerns about demand for the cattle and for the pork markets will keep a lid on rallies. We did see steady to higher cash trade this week, which was a real supportive number. And I think the weekly slaughter has surprised some people. A lot of analysts were looking for a sub 650,000 head kill week, and we still may get that if we don't put together a decent Saturday kill. But we started off the week killing a lot of cattle fairly aggressively, and that means packer demand is still pretty robust for the cattle. The weights were down 3 pounds compared to the previous week, so it does confirm reports that we've received from feedlots that these cattle that have been placed are at lighter weights, and they will be fed out in the next couple of weeks unless there's an incentive to move them rather quickly, and that would be in the form of higher prices. So we still look for cash trade to gain some strength in the next several weeks, which would be supportive for the cattle futures. Now, October live cattle options go off the board today and probably won't have much fanfare on Monday. You have first notice day against those October cattle futures, and right now wouldn't not expect to see really any deliveries. So probably going to be a non-event in that respect. But certainly as we go into this weekend, if the stock market really takes a dive lower, it's probably going to cap any type of a rally attempts in the cattle futures.
Well, I do want to review on our livestock summary what we had in the way of cash cattle market activity yesterday. You referenced the fact that it seems like the market was kind of holding its own here over the past week. It's just kind of been holding steady for 2 or 3 weeks at least. Well, it looks like we had live cash cattle trade out in the plains between 144 and 144.5. We'll call it steady, maybe a little bit higher than last week. Dress basis sales, steady to firmer between 230 and 230.50. Well, the cash live hog market, not enough to establish a trend. On the carcass basis hogs yesterday nationwide, we were down over $3.50 a hundredweight. Now let's take a look at our futures. And when we finished up yesterday on live cattle, we were a nickel lower on the December contract at 147.87. When we went home yesterday on the feeder cattle market, we had November down 90 cents at 176.42. And on the lean hogs, well, we finished up with the October up $1.57, December up $1.27. Any penny calls this morning, Brian?
Yeah, I think you're looking at a little bit higher cattle prices out of the gate here, maybe 10 to 20 higher. Hogs, we certainly hope that what we saw on Tuesday, with big outside reversal, lower close, everything looked terrible from a technical standpoint. And then yesterday you gapped higher and closed on the highs of the day. Hopefully you can get some follow through and negate Tuesday's reversal and indicate some sort of a seasonal low being placed in that hog market.
Yeah, that gap was an important move on the chart yesterday. That's a good point. Sure. Well, thanks, Brian. Appreciate that. You have a good weekend. Brian Hoops of Midwest Market Solutions. So, Suzanne, the table is set. We're about ready to start trading.